Happy New Year. Well, almost. We almost at 2024, and I want to talk to y'all about what I see, my outlook in the commercial real estate investment world in 2024. Now, I got some insights from being in the business for a while, 20 years, but I don't got a crystal ball. And neither does CNBC, neither does Bloomberg, neither does any of these economists. But all we can do, right, is look at the trends, the historical trends in the past. We can look at the present, and we can make some calculated, I don't even say guesses or hypotheses, but we can put some thoughts together about what's going to happen in 2024. And I think a good time to think about that is now, as you are closing out 2023. A big thing that we do at our company, Affinity Investments, is we talk a lot about closing the year strong in order to set your next year up. And so a lot of people in the real estate business, whether the market's good, up, bad, sideways, slow down in the month of December, I think that's actually the time to turn up. You need to take a break whenever you take your break. But while it's grind time, put the work in. A lot of industries, this is their peak season, so people going hard. So now's the time to close this year out, but to do it strategically with 2024 in mind. So here's my outlook for the commercial real estate market in 2024, especially here in the Bay Area. And look, one thing I say about real estate is there's things that affect us all nationally and globally, but real estate is still a local business, right? So business here in the Bay Area is going to be way different than business in Miami, than business in New York or Dallas or Chicago, right? So you look at your own market, but I think what happens here in the West Coast will also be a reflection of what's going on in the United States. So a couple key points that I see. First thing I see in 2024 is I believe we'll have a stabilized interest rate environment. Stabilized. Now, all that means is I don't see aggressive rate hikes coming. And in fact, the Fed has pointed towards possibly lowering the rates. Now, a bunch of people in the real estate industry have been saying, hey, they're going to lower the rates, they're going to lower the rates, they're going to lower the rates. So I'm not going to sit here and tell you, oh, they're going to lower the rates, they're going to lower the rates. I think there's a good chance for that to happen. But even if they lower the rates, you're talking about very small incremental drops because the Fed is just now feeling confident about this whole inflation situation, right? A few recent reports have come out that have noted that, hey, look, inflation is really, really starting to get tamed. Now, if you go to the grocery store, you might not think that. If you go get some gas, you might not think that. If you're doing some Christmas shopping, you might not think that. There was a report that came out and said, this was the biggest Black Friday that we've had in terms of spending. A good friend of mine was like, well, look, is that really that people went out and bought more things, or is it really that everything is more expensive? And I never looked at it, I had to think about it. And I was like, oh, that's a good point. Yeah, everything is more expensive. But at least some of the key numbers that the Fed is looking at has improved in regards to inflation. So I think we will see a stabilized interest rate environment, possibly even slighter lower interest rates. And it is an election year, and the presidential administration does not run the Fed. But it's politics, you know what I mean? So these guys, influence each other for sure. So I think that election year coming up, we got some inflation numbers that are in our favor. I think we'll see a stabilized interest rate environment. I do not see, even if they lower it, I don't see us going to 4% anytime in the near future. But stabilized is good for me, right? And it definitely will help out in terms of transaction volume, which is the next thing that I see for 2024. I see a very much increased amount of transaction volume in the investment business, in commercial real estate. I mean, I think we have been on ice as a market here in California, but I think also throughout the United States. It's not just California, it's not just the Bay Area, it's the slowdown. When you've got to pay 7% or high 6%, and something that's a 5% cap rate, many people don't want to do that. Unless you have cash and you're getting financed, you're going to think about that, right? So I think, number one, we'll see stabilized interest rates. But number two, I think we're going to see an increase in transaction volume. And I think that's due to having stabilized interest rates. People are going to feel a lot more comfortable about going and getting a new loan on a property where they can make money. But I think the real driver, the thing that's really going to drive transactions, is flexible and motivated sellers. Because at the end of the day, the sellers kind of hold a lot of the cards in what's going on. We don't see a lot of inventory on the market right now. The inventory that is on the market right now is not really priced well. It's not priced in line with the capital cost that investors have to spend. Some investors are on the sidelines. And a lot of investors think that, hey, we'll see an increase in distressed properties, right? And they're looking forward to 2024 as saying, hey, we're going to see more defaults, and therefore we'll be able to do more deals where we can actually make money. I do think I track foreclosures here in the Bay Area, the Central Valley, and all the markets that I work in. I do see an increase in foreclosures. I don't see a massive spike, though. It seems like an incremental increase. It seems like the lenders are, extending and pretending. It seems like the lenders are onesie twosies on their defaults. They're not wanting to have a big wave of defaults like we had in, 08. But we do see increased amount of foreclosures. We do beginning to see more flexible, motivated sellers. And I remember looking back to the Great Recession, it took a while for sellers and banks, who were sellers at that time a lot as well, to realize that, hey, if I'm gonna sell this property, I've gotta meet the market, right? And then, all right, once they figured that part out, then they had to figure out where the market was at, right? And a big part of that was a lot of buyers. There was only a certain amount of buyers in the market. As we went on, as 09 turned to 2010, as 2010 turned to 2011, buyers became more confident because, we have been through it for a couple of years now. So now they felt more confident. We kind of were able to figure out where that market was in terms of pricing. So I think that year for us in commercial real estate, particularly here in the Bay Area, is going to be 2024. I think we're going to see more distress, not, outrageous amounts of distress, just simply because people have had to actually qualify for loans. People have had to actually put a lot of money down for loans. And, in certain types of properties, like office properties, it's going to be hit harder than others. Certainly office is going to be hit harder a lot than industrial. Multifamily really has to do with the type of financing on, because, we're not seeing high vacancy rates in multifamily. We're not seeing major drops in rents in multifamily like you are in office, right? So I think that sector is going to get hit harder than, let's say, industrial or multifamily. But a lot of loans, the challenge for multifamily is you have a lot of loans maturing in 2024. There were a lot of loans that were done in 2021 that were 3-year deals, right? And that was 3 years ago in 2024. There's a lot of CMBS money that's maturing in 2024. So something has to happen. I think at the end of the day, that's going to equal more transactions, more motivated sellers. And I'm hoping that sellers will see this and work out a deal before letting the banks take over the properties, right? But there will be more banks that are in control of properties that will be selling. So that is good news for investors, because you should be able to get a deal where you can actually make money. And hopefully we'll have a more stabilized interest rate environment, which means the cost of capital will be down slightly, at least at a point where you can negotiate at a building the right price with the right income to where you can make money. That's huge. You know what I mean? I think prices will come down, but I don't think they're going to crash. I mean, I consider a crash to be anywhere, in my era of time, the Great Recession, I sit there and crash. If you drop in, 30 or 40%, that's a crash. If you drop in 10, 20%, that's, that's not really a crash. That's a correction. That's life. 40% though, in my mind, and I could be wrong. I'm not the expert on market crashes, but what I haven't been through is a real one and lived through that. If it's over 40%, that's a crash. I don't see us dropping that much. I see us dropping. I see some deals getting done. I see flexible terms. And I see the last three, the third thing of my points of what I see for 2024 is I see a lot of creative financing. I see a lot of creative financing. I'm starting to see that now. When you see brokers, right? Corporate brokers, primarily marketing. I don't know if you see this. If you see this, throw me a comment on it if you're seeing what I'm seeing. But when you're seeing the Marcus and Miller Chaps, the NAIs, the Colliers International, when you see them marketing seller financing, which I'm seeing a lot of right now on all asset classes, when you see that, that means, and these guys typically don't deal in that world, right? They typically just bring the cash, get it done, institutional investors, so on and so forth. But they are at the point where they're marketing seller financing. That'll trickle down to the independent shops like us, which we've been talking about that the whole time. That's what we do, right? And we're getting deals done with creative financing. I'm seeing a huge opportunity. Like I did a previous video on subject to wraparound mortgage. I see a huge opportunity for that. I see sellers who have equity, who trying to sell buildings, they got equity. They're not going to give it away, but maybe what they can do is they can structure their equity into the deal to help the buyer out. I think that we're going to see a lot of that in 2024. So just as a quick summary and a recap, I think we're going to see a stabilized interest rate environment, slightly lower interest rates in 2024, maybe greatly lower, but slightly lower at least. Second of all, I think we're going to see a big uptick in transaction volume in commercial real estate. And because of lower prices and motivated sellers, distress, we will see that transaction volume. That doesn't mean that I'm saying that the prices are going to shoot up. I don't think so. I think we're going to see a slight decline in prices, and we're going to see an uptick in volume, which is actually a good thing for investors, brokers, people in the business. And then thirdly, I really believe that we're going to see a lot of seller finance deals. I think that's going to be real popular. I think that when we see corporate brokers doing it, of course, the independent brokers and investors, we are the masters of creativity. So we're going to hop on that train. And so let me know your thoughts. I don't got no crystal ball. I've been around 20 years. I'm seeing some stuff. I'm trying to plot out my 2024. This is what I'm seeing. Tell me what y'all seeing, and let's finish 2023 strong. Appreciate y'all time. To the next video. Peace.